Money Day, guys and girls, welcome back to another episode of Market Mondays. This is Market Mondays episode 6, brought to you by no other than Learning with Vel. I go by the name of the boss, Don Biggervel, Free Max Biggervel. Ow. Now, listen, guys, Market Mondays episode 6, we're back, and I want to show you guys exactly what I've been looking at this week, what trades I've sent out inside of my Telegram. So if you guys are not a part of my premium Telegram, you guys can click the link in my bio, and by clicking the link in my bio, you guys can get access to my free Telegram, where I've also sent out trades today, and people have also been screaming Money Day. So with no further ado, I am going to break down on the charts, but as always, make sure you like, subscribe, you know the vibes, it's lit side. Let's get into this. So first things first, guys, what I want to do is I want to go over to the economic calendar, and I want to show you that tomorrow we only have the GDP taking place, the GDP for the pound. But today we had the Bank of England interest rate. We had the pound interest rate take place, and they kept the rate the same. Usually when they keep interest rates the same, it's usually a negative reaction for the charts, but we will get into that at a later stage. For now, what I want to draw your attention to is the jobless claims. The jobless claims result was actually worse than expected. It was 231,000 people unemployed, 231,000 people jobless. Now, I just want to explain to you guys that for a lot of you who are watching this video right now, maybe you've never really looked into the fundamental data before, or maybe you have but you don't understand what the fuck it means. What I'm going to explain to you guys is this. When you look at the jobless data, the unemployment data, the GDP, the PMI, the CPI, all of these data releases are very important, especially when you are a prime minister or president of a country, because essentially when you approach an election year, these data releases are the same statistics that your opposing campaign runners would use against you. Okay, if you're the prime minister of the United Kingdom or the president of the United States, you can't jump on the microphone and say, hey, I'm leading the country into a better, financially stable, more economically driven, like, you can't say you're running the country into a positive direction if there's more jobless people now than there was 3 months ago, if there's more unemployed people now, if there's less people spending money in the economy, so all of these data releases have a knock-on effect to business terms. And I know you guys might think, look, man, I just want to focus on Forex, GBP, USD, Euro, USD, blah, blah, blah. Well, understanding all of these macroeconomical events has an effect on the currencies being stronger or being weaker. So if you're looking for mentorship, I would strongly suggest you guys head to my Discord, head to my Telegram, My Telegram is free for you guys to get access, and I'm giving away education inside of there for free at random to lucky winners. But also, you guys can send me a message. You can also book a call in the link below to get a free one-to-one session. I will give you guys in the flesh, me right here, a free one-to-one session, giving you guys a easy, simple strategy which you can go on off and use in your everyday life when it comes to trading. So we're going to go over to the charts, and we're going to have a look at the DXY. Now, the DXY, when the jobless claims came out, it did actually push the dollar down, which would actually replicate a bearish reaction, which is what we would expect, right? The dollar released its results. They released their jobless claims, and there was more people jobless than previous. So that result was negative for the economy, which led to be negative for the currency. So we did have an initial push down lower. However, if I just show you guys on the daily time frame here, what I'm expecting to see here with the dollar is, since we've taken out this high, we cannot ignore the fact, guys, that slowly but surely we are getting higher and higher and higher. Okay, we're making higher highs and higher lows, higher highs, higher lows, higher highs. Potentially now the higher low for us to push up and make a new higher high, which would be targeting this area of liquidity that we have around 106 handle. This 106 handle is going to be important. It's important for me because I need you guys to have a look at the bigger picture. Now, the bigger picture is showing us that we do have some liquidity in and around this area. We also have some imbalance above. And then if we go on the monthly chart, well, the monthly chart shows us that really and truly, although we're sitting inside of a candle right now, there is no reason for us to really expect price to just make a new low from where we are, okay? Since 2023, price has failed to really come down considerably and make a new low. But what we have been doing is we've been filling this gap of imbalance. Some of you might call it an FVG. We've been filling this fair value gap, okay, this imbalance area, and price has pushed up. Now we pushed up, filling the imbalance, and then we came down with this monthly candle, filling the imbalance. So now we could just be on the way to the upper room. Shout out Ned, okay, the upper room. That's where we could be going. Now on the daily, well, the daily's not really showing us much. And this is a classic 101 example of how and why you guys should listen to what I'm telling you, because most people probably won't tell you this because they want to get paid from you just taking a trade. If you're inside my VIP channel or even my free channel, you'll notice I do not take trades every single day. I do not send out trades every single day. I do not get a commission each time you guys place a trade, because you guys can use your own broker. You can do whatever you want. I don't actually care. So it's important to understand that we don't always have a picture. Sometimes there is no picture. Now, I've told you that I believe this is bullish, right? So what I would like to see now is a bullish sign, okay? I've seen price pushing up, and then over the last few hours today, price has been coming down. But ultimately, I would like this candle to finish pushing higher. I need to see this formation continue pushing higher in order for me to believe that the dollar is going to push higher. If I can't see that image, if I can't see that picture, I'm not going to take the trade. And that is not a problem, because right now there isn't a trade. So that's Euro, that's DXY. Sorry, I'm going to show you guys. Euro AUD, Euro ARD, okay? Euro AUD has been a phenomenal, okay, an absolutely phenomenal trade over the past few weeks. We've managed to take shorts from as high as up here. From April, the last week of April leading into May, we've taken more shorts leading into the last week of April. We've taken more shorts off of the weekly here. We are sitting high and dry, okay? We have had 1, 2, 3. Okay, this one, no, because we didn't get price come higher. But we've had 1, 2, 3 to the fault. Snoop Doggy Dogg and Warren G at your door. We've had 4 entries. 1, 2, 3. We had 3 entries. We had this one. We've had 3 entries on this so far, but we've had a couple other re-entries that I've given out inside the private community. This is really important to show you guys that time is more important than price, and sometimes, just sometimes, you guys can be in a trade that you don't need to get out of. You don't need to be in any rush to get out of. If you got into this trade here on the, we actually entered on this pull down here on the 23rd of April, today on the 9th of May, you're still in profit. Right, I've got a couple positions open with this trade, which is still in profit. Okay, in fact, we can look at Euro USD quickly as well. Euro USD, I've got some trades opened with Euro USD from as high. Okay, from as high. Let me go on a weekly. From as high as up here. Okay, inside of this yellow zone here, I've got trades open for Euro USD and for GBP USD. So why am I still holding these trades, you might wonder, or why am I telling you this? Because I'm telling you this to understand that higher time frames are going to give you guys more clarity, they're going to give you guys more of an understanding, and they're going to give you guys more profit, less of a headache. I don't want to be in and out of a trade every 20 seconds. Don't get me wrong, sometimes I want to do that, but hey, I've got a life to live. I don't want to sit by my computer 24/7. I would like to do other things in my time as well. So me taking trades off of a higher time frame just means that I now need to manage that trade off of a higher time frame. And when we enter up here, we then take 1, 2, 3, 4, 5. It'll take about 5 days to really reach its maximum potential before price turns around and starts to pull up. But nonetheless, we're able to identify these profitable opportunities. Now, at the moment, of course, the buy signal came from down here. Price is pushed down into near the 79% area, it's filled some of this imbalance, and now price is pushing up. Now that price is sitting inside of an institutional level, however, I would be interested to see what price does. So tomorrow could be the day that we see a reaction. I'm just going to show you guys a fib off of this daily swing. We can see that we have currently reacted off of the 62%. So I would favor a short where we are, but I would like to see a stronger confirmation over that daily candle. I would like that daily candle to push down lower. We go on the 4-hour time frame. Price. The 4-hour time frame kind of shows us that price has, of course, pushed higher. price has been pushing higher of late, but you know, the 8-hour time frame and the 6-hour time frame, they still show a really big bullish candle. So I'm not in a rush to jump into this trade right now, guys. If I miss it, I miss it. But based off of the daily time frame, I would like price to turn around and push back down. But what I can't ignore the fact is that there's more imbalance above and reason for price to push higher, because the dollar is currently pushing down right now. So that is, of course, the majors. Okay, we've gone over Euro AUD. Euro NZD is a bit of a nugget for you guys. Whenever you can't find a trade on Euro AUD, there's most likely a trade on Euro NZD and vice versa. Now, at the moment, this is a daily position, which, you know, to be honest with you guys, it's a very, very poor position, okay? But nonetheless, I'm still confident for price to come down. Now, what I understand, which is important to share with you guys, is that when you find an entry and you've got reasons to take a trade, but it's not in your desired area. For example, off of a daily time frame, my desired area to sell this is actually up here. It's anywhere above the 62%. Where I'm selling from right now is the worst place to sell from. It's not the worst, but it is. But if I go down onto the smaller time frames, well, in actual fact, off of smaller time frames, there's reasons why I've been able to take a buy. And for my students and for those who have access to my private communities, I'll be sure to share that and break that down with you guys so you can further have a sound understanding. But for this moment in time, what I want to reiterate is, looking at these markets right now, guys, we have to understand when we approach major news events, when we approach major news events, we do tend to get a lot of moves occurring. Today we sent out a gold trade. I sent out a gold trade for free inside the community. This gold trade was beautiful. Okay, it was a beautiful trade. I sent this out. We did have the jobless claim, so I sent this out after the jobless claims. Okay, price pushed up. It came all the way down. When price came down, you know, we hit TP 1, 2, 3 to the vote. Snoop Doggy Dogg and Warren G at your door. We smashed it. Okay, we smashed it with this trade here. Essentially, why I'm telling you this is because I need you to understand that moves can always take place in and around major news impacts. You know, big moves can take place around major news releases, and this move was after the news release. So now I'm pretty patient. Okay, we sent out a trade inside the community today. They've been able to make some profit. We sent out trades inside the paid community. They're also inside some daily positions, so we're going to hold them. But I do think gold will continue to push higher, guys. I'm not looking at gold for one moment thinking, yeah, we're going to get lower prices. I've got a fib here to show that price should react from here, which it did earlier. Okay, and for those of you who understand my teachings, I always speak about the fact that there is no guaranteed reaction that you're going to see. You're not just because price should react from where you are doesn't mean price is going to drop down 1,000 pips, 100 pips. It might only give a 10 pip reaction. So we can't get complacent to be thinking that because our criteria has been met, the reaction that we're going to get is going to be a home run. Okay, because that's not how it works, guys. Past that point there, I want to share with you guys, last but not least, my thoughts on Bitcoin. Now, Bitcoin has actually been doing quite okay. I sent out a trade for this. I sent out a short for this inside the community for free and my paid community. This trade right now, Bitcoin's dropped over 5%. Okay, you'd have made well over 7% with this trade if you had risked 1% on this trade, guys. But what I want to bring to your attention is the fact that I have been in unison with this pair for quite some time. If you guys recall back on the recent video that I done regarding Ethereum, I mentioned that there was liquidity inside of this area which we needed price to come down and take. And what's happened? Price has come down, it's grabbed some of the liquidity, and now it's pushing back up. We see these things happening time and time and time again. So I just want to explain to you guys this. The strategies that I'm using can be replicated by absolutely anyone. The youngest person I ever taught was 15 years of age. If he can do it, you can do it too. I don't want to ramble on. I want to give you guys ultimate value and nothing but value. So what's beneficial for me is for you guys to comment below. Let me know what pairs you're trading. Let me know what questions you have. Let me know what type of breakdowns you'd like for me to do as well. I'm also going to be breaking down for you guys a lot of different trading trading methods that a lot of people are used to, or a lot of people have heard about. I'll be breaking those down and dissecting those for you further. But as far as Market Mondays goes, we have covered the markets. I've shown you guys what I'm looking at. I've shown you guys what I think. And sometimes it just might be that I'm not looking at so much, which is the reason why I don't cover so much. But because of that, guys, I tend to be able to be more profitable because my eyesight is more clearer. So with that being said, I've been your host. You've been learning with Vel today. Make sure you smash the like button, okay? Thanks for watching. I'll see you guys on the other one. Always remember, every day is money day. Peace.